Oh my God, what is happening? Well, it's a overcast Saturday here where I am. It's mowing day, hence the hat and the glasses. But I just wanted to go through a few things and a bit of an updated strategy. Looking at crypto bubbles, everything is down on the weekly. It is horrible. There is blood on the streets. Some of them sold down 18%. Access 19%. Everything looks on the weekly about an average of 20%, which is not good overall for the market. However, the strategy that we have at play loves this volatility. So today we're going to cover a few things. We're going to look at the macro factors. I'm not going to talk too much about that because I don't really care. All I love is volatility. We're going to look at the BTC chart. We'll have a look at an indicator that I'm using in combination with 3Commas and TradingView, and look at that configuration, have a look at a couple of previous trades and go from there. So let's start having a look at the macro factors. It's pretty horrible. Obviously we've got, continuous issues in the crypto market. The Silicon Valley Bank, that's impacting things. $43 billion USDC stablecoin cash reserved at Silicon Bank failing. We've got Bitcoin fell below 20%. I think it's down like 8% in the last couple of days. And then we've got also the Silvergate bank collapse as well. So on top of crypto regulation, it is not looking to crash hot for anything. Let's have a look at the Bitcoin chart. This is not financial advice. This is my own, own strategy. And what I'm doing, the channel is all about stacking sats or Satoshis or more Bitcoin for one time in the future when Bitcoin is at an all-time high, looking to scale out and short the market at the top. But for now, volatility is our friend, particularly on my channel. And looking at the Bitcoin chart, we hit that 25K mark this on the daily, and then we had immediate rejection and down to now we're down below 20K again. I think this number here was the CME gap, about 19,620. And look, if you have a look at this November 22 low, 15.4, quite possibly if we lose this level around 20K, we're going to slide all the way down quite quickly, in my opinion, down to the 15K level again, and potentially even lower. As you know, I only trade Bitcoin, so any pairing I have isn't in US dollars. It's not USDC, it's not USDT. I do a couple of leverage trades every now and again, but at the moment, it is all about adding Bitcoin to my bag and keeping it off chain on my ledger, out of a centralized exchange. One of the things that I've been looking at and just talking a bit more about the Bitcoin chart at the moment, there potentially is a trade around here. This is a 6-minute chart. If we lose that level, I haven't done anything yet. If I go back here and put it on maybe a 4-hourly, have a look at that, having a look at the divergence there, it's not anything. We probably need to form a bit more of a base around here and potentially look for a long trade around that, maybe around the 19.5. But I think the reality is on this, you need to set your stop loss quite a bit under that. So I'm just going to watch the chart at the moment and go from there. I think that trade there, could fall all the way down. You probably have to put your stop loss around 16K. So it's not a good trade, in my opinion, at the moment. But I will keep an eye on that and see how we go. So that's the Bitcoin chart. Now I want to talk about TradingView and an indicator that I found through some other channels. and that's using QFL, or quick fingers lax base breaking indicator. Essentially what this is, and I purchased this indicator, put on a 3-month sort of trial to have a look at what it does. Now with 3 commas, there is the 3 commas indicators, which does have QFL strategy in it. However, it's not as advanced as this one. So I've purchased this indicator. I think it was $100 for 3 months, and it's a lot more configurable in what I am looking at, and some really good in-depth sort of instructions on how to use it. This is not a sponsor. This is just something I found. So feel free to make your own decision there. Now, what I've done is I've added this indicator to the to my chart, and I'll go through the configuration of it, and then we'll have a look at some of the coins. And then what we'll do is have a look at the 3 commas configuration and have a look at a few trades that have already happened. You would have seen in the thumbnail, one of the trades that just went off was pretty epic. You know, I bought this coin S&M against the Bitcoin pair when it broke the base 3% under, and then it essentially DCA'd in with a martingale strategy, and then you can see here it just pumped out, and that blue line was my exit set all from the beginning through the strategy. So what we'll do is we'll have a look at the chart and go from there. So I might have a look and use that coin as a good example because it's just recently gone off in a few minutes ago. So I'll just delete this off here and turn on the indicator, which is this one and this one. And I'll explain what I need to explain with respect to what is happening here. So what I've got is this indicator has been added, and it's looking at QFL. Now, what QFL is essentially looking at when the base is broken, it will place a trade below that. So if we think about the base on a level of support, when that support is broken and we can configure that factor, then it will place the trade. Now, the expectation will be when a base is broken, it will buy the coin and it will continue DCAing into the coin, because more often than not is the coin will recover and test resistance. And it's quite aggressive on the DCA strategy, and I'll go through that right now with you all. So if we have a look at the DCA strategy, I'm looking at an initial capital of 0.64. So each trade, I'm risking that much. I'll come back to that a bit later. We're looking at 1 crack per base. What will happen? So when that support gets broken, 3% under the base, as a deviation from that base, we're going to place a trade. We're going to place a trade immediately with a small amount being, where is it? Small amount being 0.001 Bitcoin. So what is that? $30 at current rate. And then what we're going to do is DCA into that to the point of adding safety orders, 0.001, every 3% down. So we're going to have 6 safety orders, and we're going to only keep 2 active on the exchange at any one time so we can conserve our balance. We're going to make sure our volume scale, and this is very important, to be really aggressive getting into the DCA strategy of 2 times volume and a step scale of 1.25. So what that means, and I'll show you on the chart here, see if we can have a look at this one here. I might try and remove some of this so it makes it a little bit easier to see. It is hard to see with all these lines on it. But you can see, okay, if we have a look, I might just zoom in. I'll get rid of this. What do we got here? Get rid of that one. That one. Put that one back on. No, maybe I'll put that one back on. If we have a look here, you can see, get rid of this down the bottom. Our base order was put here. So we had a base, this is a base, and then we broke the base by 3%. Okay, so the base was support. We broke support, obviously with the market the way it is, it went down 3%. We did our buy order. Now you're thinking, why would you buy when the market's going down? Well, DCA strategy is all about making sure you can capitalize on volatility. So when it's down 3%, we want to buy, because what will happen is if we continue to buy, increasing as we buy our orders on the way down, this will retest support, which now is resistance. Now, if we're aggressive with our strategy, it should be easy to win back that trade quite easily. So I've said I've back tested and found some articles online, and the most successful sort of take profit consistently across most coins is about 8.5%. So I'm looking at an 8.5% return on total volume. So if I have a look at this trade here, it's maybe not a good example. We might have a look back at some other ones, but we bought here. Then you can see we added a safety order here, so it dropped by another 3%. Another safety order here, dropped by another 3%. And you can see here, it started to retest retest resistance. It actually broke through and went parabolic and closed out of that trade, which is really good. Let's have a look. Here's another one. I'll look back at another one here. A little bit longer. So base order was here. You can see it broke 3% under the base. And then we added safety order, safety order, safety order, and then once again, parabolic and exited that trade. Take profit was here. So 8.5%. Here's another one. We only have one safety order there. This one we had 3 safety orders. 3 safety orders. So we're quite consistent with our safety orders on this particular one. Let's go through some of the statistics around this particular coin that we just exited a short while ago. So I've got the backtesting information set up to backtest essentially as far as I can go with this subscription in 3Commas. I think it's about a year. So it's captured the entire bear market cycle for the last 12 months. And looking at this, we've got a win rate of 100%. We've started 81 deals through this indicator. We've got a max drawdown of 57%. You say, well, that's pretty scary. And it is. 57% is pretty scary considering we're risking, I think it was 0.64 of a Bitcoin. It's about $1,277 per trade. That's the maximum exposure or risk with that. So when you're stacking that with 57%, 60% down, that's a fair chunk of change. What's that, about $700 down? But backtesting is critical to this structure. So looking at the trades and the mean and median of each trade automatically, on a mean, we're looking at around an average trade of about 3.5 days. A median trade of about 2 days. And 1 hour is minimum. So, and then the maximum we've had that we've been stuck in, that would have been that red bag, which we talked about a short while ago, 57% down, 1 month, 3 weeks. Okay, so that is the longest that this coin has stayed in a trade. So what I've done is gone back and essentially utilized some other resources online, but built a list of altcoins against their BTC pairing and back tested them to decide whether we're going to put them in the bot or not. And I think we've got roughly 73 to be exact that are in the bot. And I'll come to the bot settings later, but I'll run through a few. So we've got Arve's here. So back testing that. We've got 30% profit. It's closed all deals. Our average deal length is 2 weeks. Not a great coin. Profit factor of 6.5, which is pretty good. But the main thing is we're able to get out of the trade and we've got 100% success or win rate. ACM, BTC, yep, 52%, so quite a good one. Max deal around that same time, max drawdown 25%, mean about a week, 8 days. So we're looking about 10 days, up to 10 days on that one. AGLD, same story, 112%. Wow, that's pretty good. Max drawdown 43%. So you've got to have conviction to be able to stomach that drawdown and get it in there. But that's looking really, really hot. So I've gone through and come up with 73 coins. And as I look at different channels online, you know, there might be a new coin that I come across, I'll back test it. But the main thing with these settings is making sure that we're able to utilize them across many coins so we don't have to modify them much. Right, now what I might do is, I'm not going to go through all the coins, but I can go through the 3 commas settings and try to explain how things are linked together. So we've got the trading view indicator, the QFL strategy. We're then linking that with 3 commas through an API to start the trades. And then I'll do another video particularly on how the API works and how we start the trades automatically, hands off, just let it run. We don't have stop losses either. So that's how it's all set up. So, you know, got to have conviction. And we're not trading in USD, USDT. So it's all around getting more Bitcoin in our bag for future use. And we will compound it at some point as well. But that's that. So let's have a look at our 3 commas and what we got there. Now have a look at the bot. I'll get rid of this guy. I was chatting to him earlier. The API, once again, stuffed up. So I had to fix that up. But I've added all 73 coins in here. Now, going through the 3 commas setting is important, and I want to explain each setting. So we're going to have max deals of 16. Okay, so 16 deals. I don't want to have too many. 16 is a good number. I like the number 8, so 2 8s to 16. That's where we're sitting there. Our base order size per coin, and I'll just take this back to 1 just to help with the math up here, is 0.001. So when we buy a coin, we're going to, our first order or our base order is $19.95 USD. Okay, based on today's rate. So that's fine. It is a limit order. I only do long. We're looking for that volatility. You know, when all this is happening, this is amazing because the world's falling apart when it comes to crypto, and I love just the juiciness of those trades and picking them up. Now, down here, our deal start condition, we're looking at QFL. We're going to switch that to TradingView custom signal at a point, and then I'll go through that in a separate video on how to set up the TradingView signals. But for now, I'm just using the inbuilt QFL strategy, original 3. What that means is we've got a base. When support's broken, 3% under that, we're going to put a trade. Then we're going to DCA into the trade, adding more volume as we go down in order to exit the trade quicker. Now we've got a target profit of 8.5%. Now that is aggressive, but with these altcoins, 8.5% is nothing, especially when we're looking at what we're doing with our safety orders. This is critical. So we're not running a stop loss. We're back tested. So we're comfortable that we're able to handle the downside risk of the coin. You know, there are cases where a coin's going to go to 0. Look at Luna. That's a good example of that. But hopefully we're through the thick of that. So we're managing our risk level here about how we're handling this. Now, with safety orders and DCAing in, our safety order size is the same as the first one with a price deviation of 3%. So we've got our support, 3% under. We've got our first order or our base order, 3% under that. We've got our first safety order. Now below that, we've got a total of 5 more orders, so a maximum of 6 safety orders. So we're able to withstand a deviation of 33%, okay, from the opening trade. Now, when it's against Bitcoin compared to USD, that's not as much, because when you're doing USD, a coin could go down 50, 60, 70%. But when you're doing Bitcoin, Bitcoin's also going down. So the impact against a Bitcoin parent isn't as bad as a USD. So, everyone's worried, I've lost all my USD, going to zero. I'm just, all I care about is Bitcoin and getting more in my Bitcoin bag on my ledger. Now we're keeping, what max active safety orders count means is we're keeping only 2 active safety orders on the exchange. I like to make sure that I don't keep too much Bitcoin on the exchange. I keep it on my ledger, so I'm able to manage my risk if we had an issue with the exchange. Now the safety order volume scale is used to multiply the amount of funds used by the last safety order that was created. Now that's a factor of 2. So essentially, if I'm betting on my first safety order, $19.95, on my second safety order, it's going to double that by a factor of 2. Now, each time it is going to double. So one of the strategies in gambling, and this is, I suppose, a form of gambling, is what you call the martingale strategy. And that is, when you lose, you double it. When you lose, you double it. So that is the volume scale of 2 and a safety order step scale of 1.25. So rather than being 3% under on the second one, it's going to be 3% times 1.25 for the next order. So as it goes down, you can see that here in a bit of a table. So we've got our back order. That is, we're putting in our 0.01 Bitcoin. Then our safety order, our first safety order is the same. Now you can see we're doubling. Now the actual size, so that's our 2 times our volume, and then our other one is 1.25, the amount that we're buying. Okay, so as we go down 3%, 207, 6.75, that is 1.25 times that, 1.25 times that. So that's how we get within 6 trades or 7 trades, utilizing the total volume of 0.64. So just to recap on that, 0.64, $1,277 US. Bitcoin's bounced a little bit from when I did, what are we at, 20,154. Yeah, people are going to FOMO in and get hurt. So, so that's it. So we're able to withstand a downside of 33.77 as a percentage of deviation from the first order, which means that the recovery is only 18.9% because we're adding volume and putting bigger orders as it goes down. Now, this takes much conviction to do this time after time. Hopefully you don't end up with red bags that fall below this, but that's where the backtesting comes into play. So that's the strategy. So they're the configuration. Now, other things that I've got here is I want to make sure that we're not just buying a shit coin that's going to go to zero. So we're not going to start the deal if the daily volume is less than 10. So what that means is the base currency, Bitcoin, if there's no volume, if the volume amount on the exchange is less than 10 Bitcoin, don't take it. Okay, ignore it. Okay, and that's how it's going to work. Now we're only going to run one deal of the same pair just to manage risk, which is pretty straightforward. So they're the 3 comma settings of what that looks like and how we're looking to play this. Now, one other tool that I use to manage this, 3 commas is fantastic when it's working. TradingView is what it is. I use a bot manager just to keep an eye on how the trades are going. Now, I've got 16 active trades. 3 of them are from my last video where I was just doing the top 10, these 3 here. I did 10, all 7 have played out. There's a couple more that are a bit stuck. What have we got? Cardano, Matic, and Doge. They're a bit stuck there. So if I have a look at them first, and then we'll talk about Doge. What's Doge at? down 5%. We've done 4 of 16 safety orders, so we've got plenty of room to wind out of that trade. I'm not at all concerned about Matic, Doge, or ADA. They'll get out. But if I have a look at the ones with respect to the QFL that we're talking about today, we've got 13 trades. So you remember I had, I think, a maximum of 16 they can play out. Now we've entered 13 in the last, what have we got, 2 days. There's been multiple wins with respect to that. Have a look at that one. There's that SNM, 8.54%, QNT, 8.54%, INJ, 8.6%. These have all played out this morning, which is pretty good to see. Now, having a look at the ones that are there, and maybe I'll start with this TRU at the top, is having a look at that pair. So we've done 3 safety orders. We're at 6%. So we need that to get to 8.5%. So if I have a look at this particular coin on Binance, maybe we mark where we need to get to. Maybe during this video, I might get there, who knows. But we're looking at a sell order of 465. We've already marked it there, but I might just remove that. Just remove that off there and re-add it, just so everyone can see how that works. I'll just mark that there. 5. Okay, what are we on the 15-minute chart? So look, that looks pretty good. Pretty good. You know, we've only got to get there. Look at this structure. Quite possible. We'll get there within the next hour or two. So all good on that front. And we might have a look at another one. So maybe TXC. That hasn't had any safety orders. When we don't have any safety orders, we don't have a good volume. You know, we only make don't make that much. So I'll have a look at this one. We might mark that one as well. Now, I don't talk too much about the coins, about the altcoin. I don't really care. You know, I feel that if Binance has vetted them, there's good volume on the exchange. I'm happy just to sit there and watch what happens. I do keep a close eye on any communication that comes out from Binance around that, making sure that, you know, I haven't delisted it or anything, but you know, I've back tested these coins for the past year and tested each one of them. So they look pretty good, and I've obtained them through other means as well from other channels. So there's another one that's looking to play out, you know, that will probably play out in the next hour or two as well. So you can see here, having a look at, you know, look at the previous one, this one here, there's buy orders right here, ready to go. So we've only got 2 on the exchange. I might just show you what happens if I modify buy order, just to show you the dynamic of how 3 commas works in respect of that. So I'll just go to my deals. I'll get rid of that. What are we looking at? TRU. So we'll find TRU. TRU. Yep, we'll just edit that. And we might just put, so we've got a maximum of 6. So at the moment, I've got 6 safety orders, 2 active. So that means that there's 2 active on the exchange. So if you have here, you can see 2 in the sell order. So if I was to increase that to 6, which I'll do for the purpose of the video, I'll click that. You'll see all those other orders just automatically propagate. Oh, did I not do that? No, 6, active 3. Not sure what happened there, but that should go to 6. We'll have a look at that in a short while. Might just change it back just so I don't forget. So I'll put 2. Quite possibly I didn't have enough Bitcoin on the exchange, so it couldn't fill remaining orders. I'll have a look at that a bit later. that's what that basically means. So it's hands-off trading. So we're using our indicator through TradingView to backtest the altcoins we're going to use against Bitcoin, always against Bitcoin. And then once we've got that, we're using the API of TradingView to push it into 3Commas, the API of 3Commas to push it into Binance as the exchange, and 3Commas does all the order orchestration. So I don't have to think about the numbers, so I can manage that. And then rounding it all out is a bot manager, which I just use for a single pane of glass to see how things are going. And it's quite good because you can just click on what that is. So that's pretty much it. Now it's a sunny Saturday here where I am. I think now it's a bit overcast. It's 8:13 in the morning. I do have my mowing hat on, much to the disgrace of my partner. I'm going to go out and mow the lawn. Got about an acre and a bit to mow. I haven't mowed in a couple of weeks, so it is getting quite long. So that's me. So hopefully you've enjoyed the content today. Looking at something a little bit different of a strategy to essentially buy the volatility when it comes to Bitcoin. Not taking into consideration, look, this stuff here about banks shutting down and all this FUD is amazing. It's amazing, in my opinion. It's amazing. It was not good for the macro economic factor, but in terms of a trading strategy, buying things that are falling, I think it's really good. Yeah, and just to recap, just the QFL strategy, we're buying a broken base. So when support is broken, 3% under, we're buying, and then we're aggressive with our DCA strategy. And when it comes down and retests that, which is now support, we're going to exit the trade like that. More Satoshis, easy done. Adding them day by day by day. So that's all. I've gone for about half an hour. I'm going to wrap it up. If you've got any questions, feel free to reach out, and peace out.